This module deals with your growth strategy. In other words, how are you going to scale your business? And that comes from both finance, debt and equity, and funding. When I talk to entrepreneurs, a frequent question comes up about, well, where can I get more cash to grow? And I ask them always to take a second to ask the question, how much do you really need to growing, and can you need it right now? What do you need it for? Do you need it for long-term growth? Do you need it for marketing? Are you trying to pay your salaries, pay yourself a salary? Whatever. I think for a lot of companies, particularly those involved with international business, once you have the product and the service going, the growth capital is really for the real growth spurt of the entire company. Before that, the longer you can wait to take money, the more that you can do bootstrapping, the more that you can do self-funding, the better off that you will be when you get to that point and you really need the cash. You won't be over-leveraged. You'll be in control of the negotiations, and you'll be able to get better terms from those who will be offering you financing. Now, the way that you can grow without giving up too much of your own company is to do debt funding. You know, people traditionally think, well, I'm going to go to a bank. They'll provide me with working capital. Some of them will provide you with trade finance, short-term loans, and so forth. The good part about international business is that most of it's against some particular product and that they're more willing to loan in those cases. But as always is the case, the banks are willing to lend the most to those who need it less. So many entrepreneurs are looking to non-banks. There's a number of options out there that are being developed globally that can tap into a little bit more expensive debt, certainly though at prices far less than what the credit card companies are willing to offer you. All that depends on your credit worthiness. And then lastly, your costs, whatever it is, interest and fees and so forth, need to be factored into your pricing. Lots of people are looking for investment partners. So let's talk about equity funding. There are the traditional ones, friends and family, people willing to give you small amounts of money to get going. There are many grants out there, both from government and nonprofit groups. In the United States, for example, there are grants that are available from the federal government through the Small Business Investment and Research Funds, SBIR. The U.S. Agency for International Development has a whole large source of funding, particularly for international groups, for those particularly with a social venture kind of aim with their products or services. Now, when you hear about investment, you think about angel investors who have smaller amounts, and I mean by smaller from $50,000 up to $1 million. And they're generally focused on early stage investments. There are smart angels and there are ones that are just regular investors. If you take on an angel investor, it's probably best to get one who's smart money, who knows the particular vertical that you're operating in and knows contacts within the industry, maybe has contacts with potential customers, definitely with suppliers and so forth. For the larger amounts, what we hear frequently are the venture capital investors. They are looking for later stage investments, and they're looking for larger amounts of money, millions of dollars. On top of them are the private equity investors, willing to come in and provide larger amounts of funding. generally looking for safer investments. New to the whole process are crowdfunding investors. The advantage of having a crowdfunding investor is that you have many smaller investors. So you're not going to have any one particular investor trying to tell you how to run your companies. This is a definite downside for angel, VC, and private equity investors. They'll want a seat on your board. The downside is that the market is developing. It's not particularly large. And some of the later investors, venture capital and private equity, are turning up their nose a little bit at companies that have crowdfunding, but I think that will be changing over time. And lastly, there are these things called initial coin offerings, which are related to cryptocurrencies. That's going through a lot of ups and downs, but people have raised lots and lots of money in this particular area. The International Business Accelerator has a lot of relationships with debt and equity funding partners. We are working with ones that operate in the United States and in other countries. There are ones that are able to list in particular international stock exchanges. There are ones that are crowdfunding opportunities. There are angel and VC firms that we have contact with that operate outside of the United States, in addition to inside the United States. These are beyond the scope of this course. If that's something that's of interest to you, just get in contact with us. And we'll go through the analysis of the options, and we'll be glad to make any referrals. I think the point is that you need to have the options. What I see as the primary advantage of our kind of service, fee-for-service approach that we take with the International Business Accelerator is that we're not trying to sell anybody's particular product or service. We're trying to give you basic information and to give you the choices that are out there. And we're trying to also recommend ones that make the best sense for you. The ones that everybody else is going at, say, for example, VC funding, may not be appropriate to your company. Maybe, may not be. But let us help you think through the options if that's of particular interest to you.